Good morning, good afternoon, and good evening to all. Myself, Vaibhav. In today's session of Visual JForex, we will be continuing our algorithm development using the indicator midpoint. As the name suggests, this indicator gives you the valuation which will be derived using the closing high and the closing low for any underlying instrument. So let us head to the Visual JForex board, which has been developed by the Dukascopy Bank SA. In the last session, I had completed the setup so far, which includes the instrument subscription, where we are using the Euro USD as the instrument of choice, which is being matched with the candle instrument, and in turn, that will be matched with the Euro USD. After that, the position amount was defined at 0, and these four blocks, not four, sorry, these are five in total. First two are of 4 hourly candle period, and latter three are of hourly each. We will be defining the overbought and oversold scenario using the 4 hourly candle period midpoint block. And after that, we will be utilizing these three midpoint blocks of hourly each to define the scenario where we can enter and exit using the with the trend approach. And to look at the price volatility, we will be also taking the help of this get historical candle of hourly candle period, and these two 10-second blocks will be utilized to pinpoint the exact entry point. I will give you a brief refresher of sort on the JForex platform of what the logic is going to be. In today's session, the focus is simply going to be on completing the buy side of the equation, and in subsequent session, I will be explaining to you how you can define the conditions for the execution of the sell trade. This is the Euro USD chart with the time frame of 4 hours, and here, as I said in my opening remarks, we will be utilizing this larger time frame to look out for the trade scenarios where we will have the underlying instrument in overbought situation, and in that kind of situation we can expect some kind of retracement, and if there is a possibility of a, say, for example, 30 or 40 pips retracement, we can profit from that. So to exploit that, to optimize the entry, we will take the help of this midpoint indicator, and what we will do is quite simple. We will be comparing its current value, or you can even take the last 4 hours closing value for the midpoint and compare it to the 5 days back. So you have the data of almost a week at your hand, and you can see what is happening in the underlying instrument. If we have the rise for almost a week in any underlying instrument, we will have a good chance of profiting if we are trading in a contrarian positioning. And to that effect, we want to also trade with the trend, and we will be taking the help of hourly candle period to optimize the entry. So on the 4 hourly time frame, this condition is quite simple. You have to do the comparison, and if we have the last 4 hours output value above compared to the output value of 5 days back, for that we will have to take the shift value of 30 on the 4 hourly block. So here we have this, and if we consider these 4 hourly candle period blocks of midpoint, this block has a shift value of 1, whereas this 1 second, it has a shift value of 30. So we have to compare the midpoint 13 with the midpoint 17, and the midpoint 13 value will need to be higher compared to the midpoint 17. And after that, we will be taking the help of these three blocks: midpoint 18, midpoint 19, and midpoint 20. And here, I will change this to hourly. And for hourly time frame, we will be comparing the output value over a day, 24 hours. So we will be taking current output value for the midpoint and compare it to the output value 24 hours back. And here, as I said, we are trading with the trend. So we need the output value, current output value for the midpoint to be lower compared to the midpoint value 24 hours back. So we have to compare. There is the midpoint 18 value with the midpoint 19 value, and it should be lower. In addition to that, we are also taking the help of price action. And in price action, we want to be initiating the trade when we have bearish momentum picking up. And for that, we will be utilizing this midpoint output as a critical marker. If we have the last hour's closing value below this midpoint, whereas in the penultimate hour we had the closing value above the midpoint, then that means that the momentum on the bearish side is just picking up, and this is the quite right time to get involved for any new trade. So we will be utilizing these get historical candle blocks of the hourly time frame, and once we have all these three conditions defined, all we have to do is initiate the trade using this 10-second clock whenever the price starts to drop below the last hour's closing value. And this time around, we will be going with a dynamic stop loss target pricing condition. So you can define it multiple ways. One of the way which we can do is take the high point of the penultimate candle, and as that candle had closed higher compared to the midpoint, and now in the last hour we have the closing value below the midpoint. That means in last 2 hours there has been significant price drop, and whatever is the price drop, whatever is the current volatility, we can take the difference. We can take closing value of the last hour and deduct it from the candle high for penultimate hour, and that difference can be utilized to set the stop loss. And if you want a risk reward ratio of 1:2, all you have to do is multiply this newly created variable for stop loss by 2, and you will have your target price there. So that's how this logic is going to be. Now let's turn to the execution part. For that, we are going to need logical components here. And prior to adding the conditions, we will need to do a calculation for figuring out the actual difference. So I need to add mathematical components as well. Calculation expression first. I will join it here. Now we have to take this candle 23rd high price and deduct the candle 22nd closing value. So we will have this difference. You can retrieve this variable from auto created variables. Here it is. Candle 23 candle high and the closing value of candle 22nd. So we have defined these two variables a1, a2, and all we need to do is calculate a1 minus a2, and the result of the calculation. Here we will not define this variable result of the calculation, as we need the data type to be different. We will need it in integer format. So there are two ways. One is we take the variable and then after that we multiply the output value with pip conversion factor. I think that will be a better way. So okay, we name it AD. We have the actual difference here now. But this variable, you have to remember, is in double data type, and to be utilized in the trade command block, we will need to convert its data type to integer. Okay, and since Euro USD has 4 decimal points for 1 pip, we will take 10 raised to the power 4. So here we have these two variables in place, and now we will need to do A1 into A2, and I will not define the output value right away. We will wait for the trade command block to be added, and after that we will fill this variable with the data type integer. Okay, so we leave it there. Now we turn our attention to the output values of the midpoint first for hourly, and here the condition is simple. We need midpoint 13 to be greater than midpoint 17. So I will take these two variables, and we will need first input to be greater than second input. And few more logical blocks will be needed now. Even I am not sure how many exactly, so we add a couple of these now, and if the need arises, we will add it again. Okay, so this is going to be first input greater than second input. And then comes the designing for hourly time frame, where we need to be trading with the trade, and for that we will be comparing the output values with the interval of 24 hours. So we take the midpoint 19 and midpoint 20. So here there is going to be first input less than second input. And to look at the price volatility prior to the execution of the trade, and to make sure that the momentum is bearish, we will have to compare the closing values of the last 2 hourly candles with the output values of the last 2 hours midpoint. And as I said, we want the last hour's closing value to be lower compared to the last hour's midpoint output. So we have to take candle 20 second candle close. Again, we go back to the auto created variables, and here you will find it just right here. Here it is, and we compare it to the midpoint 19. Okay, this case first input less than second input. Then we look at how the penultimate candle had closed, and there we will need it to have closed higher. So again we take candle 23rd candle close, and compare it to midpoint 20. We have most of these conditions defined using the midpoint, and these two hourly candle blocks. Okay, so I will join it. First input greater than second input. We will also have to consider the comparison of the closing value and opening value for the last 1 hour. And there we need the candle 20-second candle close to be lower compared to the opening price. And now we need to add few more of these logical blocks. So I hope you have been able to understand this setup so far. It is quite simple logically as well as from the execution point of view. Now comes the defining of the entry point, which we will do using the combination of this hourly historical candle and these two 10-second great historical candles, the candle 24 and candle 25 respectively. So we have to compare the closing values of these two candles with the closing value of the candle 22nd. So I'll take this as the common input, and then we go to these output values of the candle 24 and candle 25. Candle 24 has a look back period of 1, whereas candle 25 has a look back period of 2. So we need last 10-second block, the last 10-second candle close to be lower, whereas candle 25 closing value needs to have been higher. First input less than second input, and in this case it will be reverse. So now it's time to bring the trade command block. It will be open at market, so whatever is the current prevailing price, we will be initiating the trade then in there. You can make it pending open, but that adds to the complication. And to keep the setup simple, this time around we are using this open at market. So let me arrange this it blocks first, and after that we will define the variables, input variable for trade command block. We need multiple action. Now coming to the defining of these input variables. This is going to be a buy order, and we leave the default instrument as it is. Euro USD, it is going to be trade amount that depends on the equity in your account. I will define it at 0.1 million. Slippage, I think 2 pips is good enough. Then comes the creation of new variable for defining the stop loss. And we will assign the newly created variable to this calculation expressions output value. So its input value will be retrieved from this calculation. Okay. And take profit is simply going to be twice of the stop loss. So all we have to do is get a new calculation expression and multiply this SLB with 2. So let me create a new variable again with the start value of 2. Now we do A1 into A2. And again, same thing we have to remember. If you create the new variable in this block, then it is going to be of the double data type, and the trade command block takes the value only in integer data type. So we have to be careful here, and while defining this variable, we have to pay attention to the data type. Okay. So now this variable is of integer data type, and we have assigned it to this calculation. And all we need to do now is join it to multiple action, and here we will have the back side of our algorithms complete. Let me color code it to make sure that the iteration flow is going through till the very end. And I think there is some problem here. First, we have to join the first flow to this first logical block, and now it is all set. Okay. So here we have completed the buy side of the equation, and if any of you have any query, you can write to me in the feedback. Quite simple. And once we complete the sell side, you can test it on the historical tester on JForex platform. And only after that you will get the idea whether the logic which we have used is going to work in the real time environment or not. And depending on the results, you can decide whether to trust it and to make use of it on the trading account. So that's it for the day from my side. Do get back to me. And for further coverage of the market developments, you can also check out the Dukascopy Analytics page for starting to trade. And as I said, for even carrying out the testing, you will need the JForex platform to be installed. So do check it out. And we are also available on the Facebook. You can reach out to us there. Thank you all for joining in. See you next time. Till then, goodbye.